Good morning. Thanks for tuning into the Trade Setup. I'm Neeraj Shah, and let's take stock of the key newsmakers. I'm afraid it's an even more dull day in terms of newsmakers, if you will. But let's start with what the US markets did and the other cues that should be kept in mind. So, the markets absorbed tough news. Janet Yellen, World Bank, everybody sounding words of caution. I think the US markets did reasonably okay for themselves. So, didn't react too much to bad news, which is a great sign. Yields came off a little bit. I think that probably helped the market. So if you look at the other cues for the day today, the US 10-year yield mildly off from the northwards of the three number. CBOE VIX came off quite sharply, to be honest, and crude kind of stayed steady. So nothing dramatic when it comes to the crude price movement. It's steady as she goes at about 120, but no incremental. Actually, there was incremental negative news, but the markets, I think, digested them well. So what's the news roundup? I mean, World Bank cut the growth outlook on stagflation danger and therefore outlooks for multiple countries per se also, but largely the world growth outlook has been cut. The asset plunge in some of the money managers, especially Cathy Wood's funds, the ETF, is amongst the biggest. Some of you might have subscribed to that in the past year or might have heard the name very, very strongly, where everybody does a little bit of global investing too. So, at times these fancied names don't yield the desired results. Nothing take away from that. Maybe she bounces back. I hope she does, because investors' money will be great, will be helped. But yeah, thus far, her funds aren't doing all that best. Oil is holding near the 3-month highs as traders are assessing the demand outlook, which seems to be picking up. Asia stocks are likely to get some reprieve as yields have retreated. And in terms of other news flow, as per PTI, Maharashtra has recorded 1881 COVID cases, which is an 81% rise. And that's no mean feat. So which is why we've started saying at the end of the trade setup every time now that please be careful and stay masked up when you leave. Be that as it may, Asia's probably have a bit of a leg up. SGX Nifty 2 should be showing a sign of an uptick, maybe 0.5% or thereabouts. The last time that Virat showed me what it is doing. So yeah, about 0.53%, 87 odd points. So a bit of green on the screen at the start. What happened in trade yesterday? Not too pleasant. I must say that now it's for probably 3 days of adverse market bread. Sure, the MRPs of the world did okay, but largely there was a bit of a pullback. See, oil sensitives did well, right? Yesterday we were talking about that all oil sensitives, be it upstream or downstream, could do well. Downstream may have left a bit to be desired, but upstream certainly did well. PB FinTech and then the promoter and the CEO selling did have that impact on the stock, but a bunch of others fell, and a bunch of large caps fell in trade yesterday as well. Everything from a UPL to a Titan to a Z Entertainment had a bit of a corrective move in trade yesterday. So what's the trade setup therefore for the day today? I think if technical chartists start to be believed, and of course they have to be, I'm just saying their observations are to be believed, of course, that the Nifty's resumed the lower top, lower bottom for structure on hourly charts, and that is usually not construed too positively for the very short term. Let's see if today's rise gets sold into or no. I would suspect that until the MPC outcome is known, the bank Nifty will very likely be very, very range bound. So we'll have a 0.5% uptick because of what the SGX Nifty is indicating. I really doubt there is too much in store in the first 1 hour after that. So be mindful of that. I don't think this is a trend changing move in any fashion whatsoever. So that has to be kept in mind. And yeah, the other piece is that Asian energy shares could be in focus because oil has gained on demand expectations. So across the board, there is some bit of traction out there. Maybe we'll continue to see that in India as well. It's a big day. It's the policy day. And just a quick preview of what could happen. So the real repo rate, remember, is deeply negative at minus 3.4%, right? Think of 4.4% the actual rate and headline CPI at 7.8. So we have a real repo rate at which is negative 3.4. Now, I think logically there will be a thought of arriving at a neutral real rate of 1% odd. Therefore, either the headline CPI has to fall sharply, which doesn't show any signs, and therefore people will logically be thinking, will RBI will have to substantially increase the repo rate and tighten liquidity, and therefore there will not be any surprise if there is a 40 to 50 bips rate increase today. Some people are even saying 75. I doubt that, but 40 to 50 could very well be a case in point. Now, I think the market is kind of factored in 50 basis points of repo rate and CRR, but further stricter measures to clamp liquidity due to the lingering inflation might have ramifications on the market trend, right? And apart from the monetary measures, viewers, keep in mind RBI's guidance, more importantly, on growth and inflation forecast could also determine the market trend. So that is clearly the big elephant in the room. Until that is out of the way, until that commentary is known and absorbed, don't try and be a braveheart and a hero and try and go out for trading. Maybe there are better things to do. Stocks to watch, unfortunately, there isn't too much. Now, I'm a bit divided on Tata Motors because some people say the news has come out already, but I saw the terminal and it's come out yet again. So I missed it yesterday. If I missed it yesterday, I'm bringing it again today. If it's new news, then that, excuse me for not having a complete handle on it, but they've secured India's largest ever EV purchase order. And, even if this is yesterday's news, I think stocks like Tata Motors and the others remain in focus. I'll get to that in a moment. Why? Because autos are certainly firmly in focus. SBI Life, HDFC Life, Max. These will be in news because the data has come out for the month of May, and the individual weighted receipt premium for private players grew about 96%. SBI Life, in that, this is on average 96%. So SBI Life was at the upper end of the average, right? 193% in May, a 3-year CAGR of 14.5%. So fairly impressive. Remember, this May would have been a high number because last May was very bad. But in that, SBI Life actually done well. Max Life at 73.3%, mildly lower than the average, but the 3-year CAGR is still impressive at about 16.2%. They've posted a decline in the past few months, so therefore this is a bit of a good number for them. HDFC Life, unfortunately, 51.8%, and the growth in the month of May. The 3-year CAGR is patchy 5.8. ICICI Pru even worse, a growth of only 36% and a 3-year CAGR of minus 6.1%. So on that metric, which is individual weighted receipt premium, somehow SBI Life seems to be doing well. LIC, by the way, since it's listed now, they reported a growth of 65.1%, a 3-year CAGR of 7.6%, which is up about 27.8% in April 2022. And April 2022 were 27.8%. Now they've done about 65% in the month of May, but the 3-year CAGR at 7.6%. So, well, certainly not as good as SBI Life, etc. But which is the point that so many people have been making, that now that LIC is listed, you don't have the need to necessarily buy into an LIC, even if you want to buy into insurance. The first question is, do you want to buy insurance? And if you want to buy insurance, then should LIC be it because you are invested in it or because it's such a large PSU and such a leader, or are there better players out there? That's the question you got to ask. So, let me try and solve the quandary for you in some fashion. Motilal Oswal says that this is their view, of course, that after reporting moderation in growth over Jan and Feb, the industry is now witnessing healthy recovery in the past few months. They expect growth to remain healthy. And SBI Life, growth in ULIP, they believe, might remain weak due to its volatile market conditions. And therefore, you got to ask if the major ULIP players, maybe ICICI Pru or some of the others, maybe they should be shunned. But they prefer SBI Life amongst all the listed players. So this is their view. Other brokers may have other view as well, of course. Some price and volume action seen in stocks like Chennai Petro, MRPL, AGI Infra. I don't quite know what AGI Infra does. It's a 500 crore market cap company, so please be careful. But a fairly solid price and volume action. And Chennai Petro and MRPL, no prices for guessing, right? The GRMs, the way they are, everybody's latching on to them. Very strong price and volume action seen there. And 2 brokerage notes, both on auto. Remember, I was telling you why auto remains in focus, and Tata Motors, etc. So Nomura has come out this very global comprehensive auto report. The downside in that report, their top picks globally don't include an Indian name. There's a Chinese name, there are a couple of others, Indonesian name. But here's their view on the Indian autos. They're saying that they expect Mahindra & Mahindra and Tata Motors to benefit from their strong model cycle and early launches in the EV segment. And they say that Maruti Suzuki has lost market share over the past several quarters due to low exposure of the utility vehicle segment and a dearth of new model launches. And they expect Maruti to gain share as it launches new UV models in the second half of FY23. So watch out for this one. Keep in mind, on June 30th, Maruti has an unveiling of a new vehicle as well. So therefore, it remains in focus. And Systematics came out with a note on TVS Motors. They've upgraded the stock to a buy. I like the arguments, and therefore I'm bringing this. Usually, I don't talk necessarily about Systematics all the time. But the argument was interesting. They are saying that they've substantially improved the competitive positioning. Bunch of things are helping them. They've showcased, multiple successful model launches, expansion in exports, robust profitability, and a sound EV strategy. The last 5 years, they say TVS has reported a CAGR of 3% in volume versus a 2% decline for the industry. And the EBITDA per vehicle is now comparable with that of Hero Motors. So they've gained that. And they believe that the company would focus on improving its EV portfolio and also jointly develop options for the global markets in association with BMW. So a bunch of positives going for them. And that's why they believe that TVS Motors is worth an upgrade in the current market scenario. That's the key thing. So viewers, a lot of brokerage views, unfortunately, not too many stocks in news, some small ones here and there. But yeah, that's the nature of the trade today. Anyways, until the MPC is out, it should be a no trade zone, so to say. Let's wait and hear how hawkish or not hawkish Shaktikanta Das is. Thanks so much for tuning in today. Have a safe day ahead.